Hi there and welcome to The Daily, your go-to podcast for all things share markets, brought to you by Moomoo. I am Byron Smith, filling in for Michael McCarthy, who is away today. It's another busy day, so let's just get into it. Overnight, the US share market staged a modest rebound. The Dow Jones lifted 0.3%, the S&P 500 gained 0.4%, and the Nasdaq edged up 0.44%, as markets tentatively clawed back some of their recent losses. But despite those numbers, sentiment remains cautious. Investors are in a classic wait-and-see mode ahead of key earnings reports and crucial inflation data, which is due out later this week. Adding a bit of political volatility to the mix was President Donald Trump's dismissal of Federal Reserve Board member Lisa Cook. It's a move that's not only contentious, perhaps legally murky, and it unsettled markets. It raises concern about the independence of the Fed and the stability of its decision-making going forward. It will be important to markets to see how that situation plays out in the weeks ahead. Overnight, among the US megacaps, Nvidia, Tesla, Taiwan Semiconductor and Broadcom all posted gains of more than 1%. We saw a stronger performance from drug maker Eli Lilly, which surged 5.85% off the back of positive trial data for its new oral weight loss drug. There was also a lift in airline and aerospace stocks in the US. Boeing jumped 3.5%. GE Aerospace gained 2.75%, both buoyed by a major aircraft order from Korean Air. Helmet Aerospace and Southwest Airlines each rallied about 2.7%, with Southwest announcing a strategic alliance with Taiwan's Eva Air. But it wasn't all good news from the US. Keurig Dr. Pepper fell 6.9% as sentiments further soured on its proposed deal with coffee group JDE Peet's. Investors are not impressed with that arrangement at all so far. Back home, the ASX 200 dropped about 0.4% yesterday, giving back some recent gains, while Hong Kong's Hang Seng tumbled 1.2% following renewed tariff threats from President Trump directed at China. He threatened it was about a 200% tariff on China if it does not export rare earth magnets to the US. So that will be crucial to see how that unfolds. Now let's talk about earnings, because it's reporting season and things are pretty interesting in Australia and in some other markets. We saw big swings in Australian stocks yesterday. G8 Education dropped 5.46% and Fortescue lost 3.9% after disappointing the market. On the flip side, Coles Group soared 8.5% on a strong $1.08 billion profit result, while Ingenia Communities had a great day, up 4% after reporting a 33% lift in profit. Just to quickly recap on a point that we've made throughout this reporting season. This is something that Michael McCarthy repeats a lot. And so just as the US reporting season comes to an end and Australia and Hong Kong continue, we're seeing big, pronounced swings in stock prices because of how companies are revising their earnings. So when a company signals its profitability outlook is improving, its share price is often following that upward. On the other hand, if the outlook worsens, the stock is usually taking a hit. It's a clear pattern, and it's why we pay so much attention to earnings season. And it's important for investors to also pay attention to the stocks they are invested in or are looking to invest in, as earnings revisions can be a clear signal for them on whether to hold, sell, or double down on that stock. We'll be seeing more of that today. It's another big day for results here. In Australia, investors will be watching updates from Woolworths, WiseTech, Mineral Resources, Nine, and NextDC, among many others. Some of those have actually already reported this morning. So let's just focus on three key stocks that are reporting. These are on our watch list today. And first up is DroneShield. It's been one of the most traded stocks on the Moomoo platform this year, with its share price up more than 350% year to date. This morning, the company reported a 210% revenue surge to $72.3 million for the half year, and that turned into a $2.1 million profit, which is a sharp turnaround from a loss the year before. The market will be closely watching to see if those numbers are enough to maintain that stock's significant momentum. At the opening today, this morning, it's holding steady. Next is Woolworths. This is a different story. So Coles yesterday, as we mentioned, had a really strong result. This morning, Woolworths did not. It underwhelmed the market. and at the open, it's well down. So despite a lift in sales, Woolworths reported a fall in profit of 17%, largely due to weaker performance in its core supermarket division. Woolworths will also cut its dividend to its shareholders. So we'll see how deep that slump goes for Woolworths. It's well down 10% or more so far this morning. We'll see how that progresses in trading today. And finally, let's move to the US and take a look at NVIDIA. It's the world's most valuable company, and it is due to report its second quarter results early tomorrow morning Australian time. Its share price has more than doubled. It's up 100% since April, so in about 4 months. And now, with a market capitalization of 4.44 trillion US, it now makes up about 8% of the entire S&P 500 index. So its results have the potential to move the entire market. It's also seen as perhaps the most significant bellwether AI stock in the world. So it's kind of has a determinative prediction of where the AI sector is going and how much investor momentum there is behind it. So we'll see tomorrow, based on its results, whether or not you can kind of justify the meteoric rise that it's had. But it'll be a fascinating result, and we'll be delivering some analysis of that in the morning. That's it for the daily this morning. Salim will be back with you tomorrow morning. Thanks very much and have a great day.